Thank you for joining me. I'm Alex, and I would like to talk to you about Beyond Meat because there's been a news story today which was very interesting, and I'll get into that later. But first, what they do is not meat. So Beyond Meat makes burger patties and other stuff, not much other stuff, but apparently really good burger patties that you can soon get at, I think, McDonald's. I'm not exactly sure, but they're in many restaurants where you can get a Beyond Burger, and it's supposed to be pretty much the same as a meat burger, just that it's plant-based. It's not healthier for you. It's just not meat. So, current price is $143 with a market cap of $8.6 billion and a PE of negative 70. So, most people have said that the stock is amazingly overvalued and it shot up so hard after the IPO. And for reasons I will get into later, I think that's actually almost a decent price. P negative 70, they're losing $2.20 per share. The share price is $143, which means it's not actually that bad. They're pretty much on the verge of profitability, even though their revenue is quite low. So their loss is quite low, so that does not actually make as much sense, but they're growing pretty fast. So dividend yield is 0, payout ratio is also 0 because they're literally 2 years old. Revenue $88 million, and that's where you can see where the problem is kind of, because a market cap of $8.6 billion, which means that price to sales is almost 100. Earnings negative $30 million, which is almost exactly what they had in the previous year. It went from 30 point something to 29.89 or something like that. So very even there, which is a good thing actually, because a revenue increase of 200% while not losing more money is obviously good. If they can continue to grow at 200% for a couple more years and then just, raise the prices ever so slightly, they can just increase their profitability so much so quick that, almost worth it to buy this. Total assets, $133 million. Total liabilities, $55 million. And total stockholders' equity of $134 million. There we go. There it is. And the equity increasing 100%, obviously also a major good thing, but obviously not quite in the same price range as the market cap, which I cannot stress enough. So for me, because the company has such a huge market cap compared to the revenue, the earnings, the equity, the everything, I chose not to buy it when it came out and when everyone else made videos about it. But it doesn't actually look so bad, especially because of the huge revenue growth. At a 200% growth, it only takes like 5 years until they're more than there, I think. Yeah, easily. So the news I read today was about Beyond Meat trying to break into the German market. And what does that mean? There is Aldi, which is a store in the US as well, which is, they were founded in Germany, they came over here, they're bringing the German discount groceries here, and they're actually very competitive on price with literally everyone else that's out there. So if it goes for cheap staples that you need in the grocery sector, they're pretty much the business to go to. Then you have Lidl in Germany, which also came over here, but only select states so far, and they're trying to expand here. And there's a few other discounters in Germany, and Germany is so competitive on price that all of those companies coming over here could majorly disrupt the grocery sector. But so far, Walmart has had the upper hand there, not necessarily because they can compete on price, but because you only need to go to one store and the prices aren't that much higher. So the problem for Beyond Meat in this story is that Beyond Meat tried to break into the German market and there was a huge sellout. Everything was sold out within minutes, basically. And the German discounters decided that since there's such a huge demand for these products, they're going to make their own. And that's kind of what the German discounters are good at. They have off-brand products in their stores to basically compete with the brand names of other stores. That's how they can compete so heavily on price. And why is that so bad for Beyond Meat? Because they've kind of proven that the demand is there, the profitability is there, basically, and there's actually a market for this kind of thing in Germany and in the US, where the Impossible Burger, Beyond Meat, there's several others. They've broken into the space and they make a good product, and they have proven that the demand is there, both in the US and in Germany. So, really bad thing for Beyond Meat is that the discounters are kind of trying to do their own thing, because Beyond Meat, interestingly enough, couldn't produce enough to satisfy the demand. If they had, it might not have been such a good idea for the discounters in Germany to try to compete with that. But if you introduce a product to your stores and it sells out so fast and there's way more demand than supply, obviously it makes sense to emulate that product, get something else into the stores, and maybe compete with that. So since those two discounters actually do have stores in America, it makes sense for them, if they perfected their product in Germany and if the demand is there in Germany, to bring that over here and compete with Beyond Meat in the US. So for that reason, I don't think I'll be investing in Beyond Meat, because competition is kind of bad for them, because they don't have the money to have this enormous expansion. They don't have the billions of dollars it would take for them to increase the production capacity so much that they could satisfy all the demand that is there. So for Aldi in particular, which is a really huge company in Germany, it makes sense to develop the product, ship the product, and increase their capacity so much that they can satisfy the demand, which Beyond Meat currently cannot. And if they get there, which it looks like they will, they can compete. And that's bad news for Beyond Meat, that's bad news for Impossible Foods, and that's bad news for a few other companies out there. And so for that reason, I actually don't recommend anyone buy Beyond Meat at this time. We need to figure out if their product is actually so much better that they can charge a vastly higher price, or that people are actually waiting for them to increase their capacity enough to satisfy all the demand. That I think we need to watch the stock for probably a couple more years and see where they go, where the revenue goes, where the profit goes, and if they can satisfy the demand. So for that reason, and in conclusion, I do not recommend this stock to anyone. I do recommend keeping an eye on it and seeing where it goes. That's it for me for today. If you like this video and you haven't already, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.